Want to follow in the footsteps of the great Warren Buffett? Like the idea of being invested alongside the Oracle of Omaha while also collecting safe, growing dividend income? Would you like to know which Buffett-owned stocks look buyable right now? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. Warren Buffett is arguably the greatest investor of all time. He's produced a 20% plus compound annual gain over the last 50 plus years. Along the way, he built a $120 billion fortune for himself, and that's after giving away billions of dollars to charity already. Being invested alongside Buffett is rarely a bad place to be. Instead, it's usually a fantastic place to be. Buffett oversees a $320 billion common stock portfolio through his conglomerate, Berkshire Hathaway Inc. This portfolio contains more than 40 different businesses in it. As a long-term dividend growth investor, I often find myself invested in the same businesses as Buffett. That's because he likes to invest in businesses that pay reliable, rising dividends. Ring a bell? Buffett might not explicitly call himself a dividend growth investor, but his actions speak louder than words. Buffett has invested a combined total of more than $150 billion in these three names alone. Today, I want to tell you about three Buffett-owned dividend growth stocks that look buyable. Ready? Let's dig in. The first Buffett-owned dividend growth stock I want to highlight is Apple Inc., stock ticker AAPL. Apple is a multinational technology company with a market cap of $2.7 trillion. I've said it before, I'll say it again. In my view, Apple is a must-own stock for serious dividend growth investors, since Buffett is one of the most serious investors I've ever had the pleasure of studying, and since I'd argue he's a dividend growth investor in disguise, it shouldn't be a surprise to see that he's invested in Apple. And boy, is he invested. Warren Buffett's position in Apple alone has a market value of $147 billion. That's right, Berkshire Hathaway owns more than 887 million shares in the tech giant. By extension, through this massive investment, Berkshire Hathaway is kind of like a tech giant in and of itself. As Apple goes, so will Berkshire Hathaway, to a large degree. So what does Warren Buffett like about Apple? Well, I might ask the inverse to that question. What doesn't Buffett like about Apple? There's almost nothing to dislike here. Apple is a dominating force in tech with products ranging from their iconic iPhone to the Apple Watch to the iPad to the MacBook and so on. Then you have services like the App Store, iCloud, Apple Card, Apple Music, and Apple TV+. And there are huge future growth opportunities for them in mobility and AR/VR. The future could be even brighter than the past. And I don't say that lightly. This is a company that's more than doubled revenue and more than tripled earnings per share over the last decade. Great business growth leads to great dividend growth. Indeed, Apple has increased its dividend for 10 consecutive years with a 5-year dividend growth rate of 9.2%. And there should be a lot more where that came from. This is one of the safest dividends I know of. The payout ratio is only 14.6%, which positions the dividend for plenty of continued growth. There's also the fact that there's $200 billion in total cash and marketable securities they have on the balance sheet. Now, the stock only yields 0.5%, so this is more of a compounder than an income play, but Buffett is a legendary compounder who knows another legendary compounder when he sees it. This must-own legendary compounder even has a reasonable valuation. With a price-to-earnings ratio of 27.5, it's not the cheapest stock in the market, but why would it be? It's Apple. You don't get a diamond for the price of a cubic zirconia. Quality is always worth paying up for, and this is one of the highest quality businesses on the planet. Now, it's not necessarily cheap, but it is reasonable. That multiple isn't much higher than the market average as a whole, even though this is definitely an above-average business. This is Buffett's largest single position in the common stock portfolio he oversees for Berkshire Hathaway. That is is how much confidence he has in it. If you want to invest alongside Buffett in a meaningful way, Apple is the way you do it. Next up, let's talk about Johnson & Johnson, stock ticker JNJ. Johnson & Johnson is a multinational healthcare conglomerate with a market cap of $462 billion. This is one of my very favorite dividend growth stocks. It offers so much balance and quality across the board. Not only do they do many things great, but they also do pretty much nothing terribly. They're either really good or outright excellent in every area in which they compete. Warren Buffett has owned shares in Johnson & Johnson for more than 15 years. Buffett is known for his very long holding periods. He's the epitome of a long-term investor, and Johnson & Johnson is the kind of business that you want to own for the long term. It's not some Momo bubble stock that might act like a lottery ticket or a total bust. It's instead a world-class business that steadily chugs along, slowly but surely, growing year in and year out like clockwork. This is not a get-rich-quick thing. This is a wonderful long-term investment that can make you slowly wealthy. We're talking about a company that has three major businesses under one roof: pharmaceuticals, medical devices, and consumer health products. Boring? Maybe. You know, it's been said that successful long-term investing is a lot like watching paint dry, but I don't think there's anything boring about compounding at 13.5% annually over the last 10 years, which is what this stock has done. Using the rule of 72, that rate of compounding doubles your money every 5.3 years. A little more exciting now, right? Well, hold on to your hat because it gets even more exciting. This dividend aristocrat has one of the most reliable dividends you'll ever see. Johnson & Johnson has increased its dividend for 59 consecutive years. That time frame stretches across wars, multiple US presidents, recessions, massive inflationary periods, stock market crashes, and even a global pandemic. You can almost set your watch by the quarterly payout of the dividend and the annual increase of it. The 10-year dividend growth rate of 6.4% won't blow anyone away, nor will the yield of 2.4%. This isn't about huge numbers with questionable sustainability. This is a balanced, ultra-reliable dividend that you can sleep well at night with. The payout ratio of 40.3% based on this year's midpoint guidance for adjusted earnings per share shows how safe the dividend is. And there's also the amazing balance sheet. This company is one of only two in the world with a AAA credit rating from Standard & Poor's. Despite the quality and the balance, the valuation is not at all egregious. Using that aforementioned guidance, the forward price earnings ratio is only 16.7. I don't think there's anything expensive about that, especially when we're talking about a dividend aristocrat with a AAA rated balance sheet. Let's be clear here, this is one of the top companies in the world. It's the kind of high quality dividend growth stock that can be the cornerstone of a portfolio. Buffett's $57 million position in Johnson & Johnson isn't big by his standards, but it would be for the rest of us mere mortals. Investing in Johnson & Johnson allows you to exist in a dividend aristocrat and Warren Buffett nexus. I can't imagine you'd be unhappy with that over the coming decades. I now have to quickly tell you about Verizon Communications Inc., stock ticker VZ. Verizon is a multinational telecommunications conglomerate with a market cap of $215 billion. Another dividend growth stock, another Buffett holding. This shouldn't be a surprise. After all, high-quality dividend growth stocks represent equity in world-class enterprises. You can't pay out ever larger dividends without producing the ever larger profits necessary to sustain that activity. Not for long, anyway. It just doesn't work. And so, a lengthy track record of growing dividends is a great initial litmus test for business quality. Now, an initial litmus test isn't the whole thing. It's not the end-all be-all. You still need to do that full research on a business. Buffett has done his research here, and he has more than $8 billion invested in Verizon. Buffett has fashioned the Verizon investment into one of the largest single positions in Berkshire Hathaway's common stock portfolio. Verizon's corporate roots can be traced back to the original AT&T and its Bell system before it was forced to break up into what became known as Baby Bells in 1984. Verizon's existence dates back to the late 1800s, more than a century. Yet the company's present and future might look even better and more secure than its storied past, and it's likely going to prosper for another century. Buffett surely knows this, which is probably why he's put so much capital to work here. Buffett is okay with a low-tech flip phone, but most consumers are practically addicted to their smartphones and the mobile data. Buffett was reportedly using an old flip phone up until pretty recently, but he's very unique. Most consumers wouldn't know what to do without their smartphone and the mobile data these devices need in order to effectively operate. You can basically throw a mobile phone bill in there with electricity and water bills. It's basically a utility at this point. And check this out. The average mobile phone bill in the US averages more than $100 a month. What does that mean? It means significant recurring revenue and profit for the company. Verizon is doing more than $130 billion in annual revenue, and their net income is coming in at more than $20 billion per year. What does that mean? It means significant recurring and growing dividends for Verizon shareholders. Verizon stock yields 5% right now. That's serious income in a low rate world. Being a master capital allocator, Buffett is able to take those huge dividends and reinvest them as he sees fit. And while us retail investors won't have $8 billion invested in Verizon, we can still do the same thing as Buffett here, except at a smaller scale, and reinvest those big Verizon dividends as we see fit. It's not just big either. This dividend is also growing. Verizon has increased its dividend for 17 consecutive years with a 10-year dividend growth rate of 2.5%. Not big growth, this is an income play, but with a payout ratio of 46.8% based on expected adjusted earnings per share for this fiscal year, this big dividend is easily covered and should continue to flow and slowly grow for years to come. Buffett likes to get a good deal on his stocks, and this looks like a good deal. The midpoint guidance for adjusted earnings per share for this coming fiscal year is $5.48. That puts the forward price earnings ratio at 9.3, a single digit PE ratio in this market. That's cheap. There's also the price to cash flow ratio, which is 5.4. That is very low, even for this stock, which is often cheap. For context, the price to cash flow ratio has averaged 7.0 over the last 5 years. So we're below that level, which is already low. Verizon gives you the opportunity to cheaply invest alongside Warren Buffett and collect a 5% yield for your trouble. Getting paid to own the same equity as Buffett, what more can you ask for? Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these 3 Buffett-owned dividend growth stocks that look viable right now. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It'll allow me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you can benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.